Hello everyone. Always people ask me in the comment section whether I'm a trader or investor, how we can use the news to make money, etc. So in this video, I'm going to discuss about me and my trading. Here, please note whatever works for me won't necessarily have to work for others. So whatever I'm telling, please take that as just a pinch of salt. It's just a couple of news and how I use it for entering the trade. First question, am I investor or trader? To answer that, definitely an investor and a bit of trader. I'm managing almost all my family members' multiple demat accounts. So in those, I invested the capital spread across 40 odd different equities, which mostly pays a good dividend. Then I pledged those equities for the trading purpose. And the important thing, I'm very much conservative. So for any given period, I will have only one or two very simple open position, not like multiple complex option strategies. And whenever I'm entering the trade, I'm fully prepared and expecting that I'm going to lose all the money in that particular trade, kind of. That's how I enter the position. I don't have the compulsion to trade every day, so I don't do over trade at all. If I make a mistake and lose, I'm okay with it since I risk only what I'm comfortable to lose. Now, coming to the trade details. First one, 31st May, almost every one of us in the country was busy and expecting the exit poll and election results. At that time, I saw this article in Money Control website. Like Macquarie Brokerage predicted in August MSCI index rebalancing, HDFC Bank is going to get 5.2 billion US dollars of fund inflow in it, etc. And explained all the details like HDFC Bank is going to increase its weightage in MSCI Emerging Index from 3.82% to 7.64% in August. Here, just a bit of background. MSCI Emerging Index always works on framework. It's not like some investment manager believes and okay, so they can increase the weightage of the stock in the index, kind of. It won't work on that basis. They got definite framework. If the equity got this much market cap and this much profit and etc., all those fundamentals of the stock will define the weightage of the stock in the index. So here on 31st May 2024 in the Money Control website, Macquarie Capital explained all those in detail, like what are all the logic and why they think HDFC Bank weightage will double in August month index rebalancing, etc. I can give the article link in the pinned comment section. If anyone interested, please have a look. So I got this information on 31st May and I did mention about this news in my pre-market video 3rd June since 1st and 2nd June was Saturday and Sunday. Now coming to my trade. Before this article itself, I was monitoring the HDFC Bank and planning to enter into a trade if it falls below 15 P ratio. Then on June 4th, due to election results, Indian market was literally crashed. At that point, HDFC Bank was trading around 15 and I thought it's a perfect opportunity to buy a HDFC Bank. Hence, I invested all the election results related trade profit in it. Basically, I bought 1500 rupees call option for 61 rupees for July month expiry, not June month, since spot HDFC Bank was trading around 1480 rupees per share. See, you might question me, what if HDFC Bank after that crashed means? As I said earlier, I was fully prepared to lose all the premium because I just bought the call option, very simple. And I got 4 to 5 reasons why probably it won't happen. First one, HDFC Bank is one of the very good defensive stock in Indian market. So if the market is crashing because of election results, then probably people will move the money to safer bet, which I thought will benefit the HDFC Bank. Second, HDFC Bank massive drop this year was on January due to its very bad quarterly results, but then they improved in March quarter, but stock price didn't appreciate due to 2 reasons. One, people were skeptic because of election, and 2, very important, lot of people don't know this, HDFC Bank index weightage in Nifty gradually dropped to 11% from its peak 15% in the last 6 to 9 months ago. Even last week I saw some videos, people claimed HDFC Bank and Reliance together consist of 25% weightage in Nifty, kind of. As I said, it was, but at present it dropped to just 20%. Reliance Industries weightage also also dropped from 11% earlier to 9% now. So HDFC Bank's one of the main reason for not increasing in the last 6 months was due to its constant erosion in Nifty index weightage, which in turn made it cheaper, and election volatility made it further cheaper. So I was confident and took the trade. Then I squared it off on last Wednesday, 26th June. Why? Same reason, valuation. I mean, this is just my opinion. Generally, for the present situation, for the Indian private banks which got the very low NPA, their fair valuation will be 15 to 17 P ratio. On last Wednesday, the P ratio of HDFC Bank crossed 19, which I thought very high, and thought the valuation is expensive, and so squared off for the profit roughly 86,000 rupees per lot. So this is how I used the news information for my trading. Now coming to my present open position. Just a disclaimer, please don't make any investment decision based on this, and please consult your own financial advisor. Again, this is not at all recommendation. Anyway, once I squared off the HDFC Bank, I entered the bear put spread July month end expiry, which I am losing money approximately 1900 rupees per lot. I mean, if required, please pause and have a look. This is my OneNote diary journal snip when I entered the trade. Basically sold 23,400 put option for roughly 161 rupees and bought 24,000 put option for 360 rupees. Why I entered this position? Last Monday, I made a video about Rhythm Desai's interview. In that, he mentioned foreign investors cannot able to digest the Nifty's valuation and they think it's overvalued kind of. So, I looked into the Nifty's valuation. I hope the regular viewers remember this chart. Since on the May month, I made a video why Nifty is undervalued. It's the same chart. For the last 2 years, Nifty's lowest P ratio was around 19 and highest P ratio was around 24. Then the 2 years average Nifty's P ratio was 21.6, and if we normalize it for the present SIP influence, that average will become 22.1. At present, Nifty is trading around 22.8, and recently in the last 2 times, Nifty reversed the momentum at 23.2 P ratio. So ideally, I should have entered into the trade when the Nifty reached 23.2. But I made a mistake and opened the position because of 2 reasons. One, Nifty ran up so much like 25% for past 1 year time period, and without major correction, at present it increased near 10%. And from next week onwards, there will be a quarterly results uncertainty. So there is a high chance people might book some profit. Because of those 2 reasons, I entered the trade and I'm losing at present near 2000 rupees per lot. Anyway, it is what it is. When I entered, my target was to exit the position by 9th of July, even for 2 to 3% Nifty correction, so I can get profit of 5000 rupees per lot. But looks like I need to play it out further, so my maximum loss will be roughly 5000 rupees per lot. So that's it. This is my current open position and immediate closed position, which I entered using the combinations of news, technical and fundamentals. This is how I always enter the trade, mostly either put spread or call spread, and occasionally buy just the call option if I think the valuation is cheaper. In future, I'm planning to do covered call if it favors. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.